What's up guys, Krenar here, aka Crypto Cray. In today's video, I want to discuss how you can value a cryptocurrency project. Before we get into the video, if you haven't already, please check out my previous video on the use cases of Bitcoin, how those have evolved over time, and where I see those going into the future. So if you haven't already, please check that out. I think it'll tie well into this video. So getting into this video, how to evaluate a cryptocurrency, I want to kind of outline the two main ways I think you can evaluate a cryptocurrency. The first being kind of the more kind of main way that I think people tend to evaluate cryptocurrencies, which is based on their market capitalization. And second is a more fundamental / intrinsic way of evaluating a cryptocurrency, which I think is kind of more maybe debatable, and maybe some people may or may not agree with, but I'll kind of give my reasons why I think that could potentially be a better way of evaluating. So starting off with the first reason, the first way of measuring the value of a cryptocurrency, which is the market cap. Giving a kind of a quick explanation of what a market capitalization means is basically what market capitalization is taking the last traded price for a cryptocurrency for one individual coin, and then it's multiplying it times its total circulating supply, and from that you get the total valuation of a network. So for Bitcoin, you could think of taking the last price that it was traded at times its current circulating supply. And I highlight circulating supply because that's different to the total supply. So in Bitcoin, I think currently right now we're right under about 17 million coins that have been issued over the network. But as we know, Bitcoins are being mined every 10 minutes through mining the block and the block rewards. So that circulating supply is constantly being increased up until you get to that hard cap of 21 million. So that's kind of the difference. You're taking the last traded price times the circulating supply, not the total supply. And so for most people, this is probably the easiest way to get the valuation for a crypto project, because basically you can just go online, go to a website. There are various websites that can give you market capitalization. I think probably the one that most people are familiar with is coinmarketcap.com. And basically the way that CoinMarketCap works is it takes kind of the aggregate based on all of the major exchanges that are trading the various cryptocurrencies that you're looking at, and it kind of aggregates those prices, it averages them out, and like I said before, it takes the circulating supply, multiplies those two, and then it gives you the current market cap of that coin. Now, in one way, this is a decent way of evaluating the cryptocurrency, because it's taking the last traded price times the total in circulation. So it's saying, you know, if all of the coins were being traded at this price, you know, what is the value of all of the total coins, which kind of at first makes sense. But then if you dig a little deeper into it and you think about, okay, well, how many of the coins are actually being traded, right? So if you think about a lot of these kind of like pump and dump schemes that happen, what typically ends up happening is that you have a small kind of group of people that are manipulating the price, where they maybe hold a lot of the supply of that coin, and then they're just trading it between themselves to artificially kind of pump up the price. And so in that sense, when you're looking at market cap or price for those coins, it's really not a true kind of barometer and the best gauge, I think, to kind of figure out what the valuation for that coin is, right? Because and basically where I'm kind of getting at with this is the trading volume. So I think market cap, the market capitalization for a cryptocurrency can be used as an accurate gauge if there's substantial volume to that price, right? So the more and more exchanges at that price that are happening, the more legitimate that price becomes, right? So if the current price of Bitcoin is hovering around maybe like 6,500, and then two people outside of that are saying, okay, we're going to trade we're going to trade it at 10,000. I mean, is that really a legitimate price if 99% of the market is trading at one price, and then just these few select people over here are trading at a higher price? That really, the liquidity on that price doesn't really validate that that should be the price, and then that higher price should then be multiplied against the total market cap. So that's one way that you can kind of interpret the market cap and see if it's a legitimate market cap, is looking at the volume at the current price that market cap is being measured at. So then getting into my second form of evaluating a cryptocurrency, which is based on fundamental and intrinsic value, which I personally believe is a better way of measuring the true kind of value and potential value of a cryptocurrency project, because I think that it's better to kind of try and measure what is the amount of economic activity and economic interactions that this cryptocurrency project is trying to replace and is trying to eat into, right? So let's think about Bitcoin, and this is where my previous video on the use cases of Bitcoin will come in handy. So just another plug. Basically, and in that video I outlined that the two major use cases of Bitcoin are peer-to-peer digital cash and a form of a store of value, kind of almost like digital gold. And if we look at the current Federal Reserve's measurement of the M1 money supply, which the M1 money supply is basically all kind of coins, cash, and basically non-bank kind of deposits, basically money that's not tied up in a bank, that's currently in circulation that people can spend. This is currently measured at about $3.6 trillion, I think, as of the end of June, so $3.6 trillion. So that M1 money supply you could kind of think of is the available kind of like money, cash, let's say, that's going to be traded between people. So that kind of, you can equate that to the digital peer-to-peer cash aspect use case of Bitcoin. And then the other use case, which is the store of value or digital gold, the estimated market capitalization of the total gold market is somewhere around $7 to $8 trillion, right? So $7 to $8 trillion. So let's think about if Bitcoin just eats into, let's say, 1% of the peer-to-peer digital cash market, right, that 3.6 trillion, and only, let's say, 1% of the gold market. And you could see that we would already, even just eating into 1% of those valuations, you would be a lot higher based on price-wise and valuation of the Bitcoin network. A lot higher than where we are now, just that 1%. Now, obviously, that's kind of assuming a lot of things, that Bitcoin is the predominant cryptocurrency project that's being used for these use cases, that advancements in the project keep continuing, that make people want to basically use Bitcoin for those things, right? For those economic interactions, kind of what I was going to before. And that's kind of the key, is figuring out what a cryptocurrency's use case is, trying to figure that out in the real world with current economic interactions that are happening with that use case, and then realistically saying, okay, how much of the real world economic market can this cryptocurrency eat into, right? And then going just off of another simple example, if we use Ethereum, Ethereum is basically wants to become a worldwide supercomputer that can run smart contracts. So another way of measuring the potential value of Ethereum outside of just its market cap is thinking about, okay, what are the various use cases that smart contracts can eat into? What is a realistic percentage that these smart contracts can eat into the total supply of economic activity that's currently happening? And maybe it's an industry that we see that's going to increase over time. So if you say, okay, in 5 years this industry is going to increase 30-40%, and then at the time of that increase, what can the smart contracts eat into of that total market, whether that be a current market that already exists or maybe a market that we're, again, predicting in the future. And so in that way, that gives you another way of evaluating what a cryptocurrency might be worth. So those are kind of my thoughts. Those are kind of the two ways I believe that you can value the total value of a cryptocurrency network, being the market capitalization, which, like I said, is probably the more mainstream and probably the easier way of just doing it, just because you can go on a website. But then another way is doing, like I said, the fundamental and intrinsic analysis of what that cryptocurrency is trying to, what are the use cases of that cryptocurrency, and then how much real world economic interactions can that cryptocurrency eat into, which is going to basically increase its value. So what do you guys think? Do you guys agree? Do you think that one way is better than the other? Is there another way evaluating a cryptocurrency project that maybe I didn't describe in this video? Please let me know, comment down below. If you guys like the video, please give it a thumbs up. If you guys like the channel and you like the content, please subscribe to the channel. That'll go a long way in terms of growing the channel, kind of hopefully growing the community that I'm hoping to build with the channel, and it'll give more visibility to the channel. It'll let more and more people see. So please comment down below, thumbs up, subscribe if you like the content, and I'll see you guys on the next one. Peace.